Hey harvesters, and welcome to the channel where we run simple and straightforward options trading to generate a daily income. My name is Matt. In today's video, I'm going to be going over the trades I executed for July 9th. We're going to be talking about the covered calls, the cash secured puts, and then the considerations I made when running each of these different types of options. Then we're going to take a step back. We're going to take a look at the last 60 trading days and make a determination. Is this options trading, this safe and simple and straightforward options trading actually work? You guys will be the judge of that. And then lastly, I'm going to talk about what I plan on doing for tomorrow, July 10th, in the market with my QQQ and my SPY shares. So let's get started. The first thing I like to talk about on my channel is my account value. That's more so a sign of what I'm dealing with and the money I'm using to generate a daily income stream. Currently, it's at $168,204.22. Let's head over to the spreadsheet and talk about what trades I executed for July 9th. All right, guys, July 9th, let's get into it. I ran 2 covered calls and 2 cash secured puts on July 9th. So let's dive into the cash secured put. For anyone that is not familiar with a cash secured put, the way it works is an investor is going to pay you an upfront premium to offload their shares in a bearish market. I would say the market's just going to go down. The only thing that you need to bring as an investor is collateral, and that collateral has to be able to buy 100 shares of the underlying you're running a cash secured put on. That's kind of the premise behind it. So I ran a QQQ cash secured put. I chose a strike price at the 554. And the reason why I did that is in the morning, the market was very bullish. It was green. So therefore I was more aggressive on my cash secured put. Usually I choose something like $2, $3 away. This time was pretty much almost at the money when the market opened. And my intuition was correct because at the end of the trading day, the QQQ closed at the 556.25. That cash secured put expired worthless, and I made $66 with none of my own money. This was just borrowed collateral money. So I bagged in a nice $66 haul. For my first covered call for QQQ, I bought these shares at the 553.42. And the way I operate in this project and my options trading is I won't choose a strike price below my dollar cost average. And the way that the strike prices work for these options trading or for options trading is they go up in dollar increments. So if I bought in at the 553.42, for me to not lose money, I would have to choose a strike price at the 554. So and that's exactly what I did, but I chose the 557. I made $51 a premium for this specific option. The market was trending in a higher direction, so I chose 557 because I didn't actually want to get these shares I bought at the 553 assigned. So therefore, at the end of the trading day, I was accurate with that 557. This covered call expired worthless, bagged $51. My second covered call, on the other hand, I didn't choose a strike price high enough. Bought these shares at the 554 after a cash secured put assignment, made about $94 a premium, and then I chose a strike price of the 556. Like I said, the market or the QQQ closed at the 556.25, so I was 25 cents into the money or over the money. Therefore, this option was assigned. So basically, the 100 shares of QQQ that I own have now been taken away to me from the 100 shares of QQQ were taken away from me and then given to that investor that paid me that premium. But end of the day, I actually made $294 off of this transaction. So let me explain. So since I bought these QQQ shares at the 554 and then the strike price was 556, I made $200 of realized appreciation. Plus, I made the premium I made doing that transaction of locking in, selling my shares at that 556 strike price. So that was a nice $294 haul off of that one options trade. And lastly, I also ran a cash secured put on the SPY. I chose a strike price of the 622, and the market opened at the 622.80. The market looked strong in the morning, so my thought process was I was going to choose a cash secured put strike price that was closer to at the money than further away from the money. So chose that 622, made $55, not necessarily too much money, but end of the day, it expired worthless, bagged $55. And in total for July 9th, I made $466 of realized appreciation and premium gain. So that was quite the haul. And then the way I distribute my funds once I make premium and then once I realize appreciation, the premium I'm making, I am strictly reinvesting into the SPY so that by the time I continue to buy, more SPY shares day in and day out, eventually I'll get to 100 shares. But then when I bought in, it's going to help appreciate my account, But then when I finally hit 100 shares, and I now have another 100 shares that I can run covered calls on a daily basis on. That's kind of the thought process. It's kind of twofold. One, help the appreciation of my account. And then two, eventually I will get 100 shares after reinvesting that premium money so that I can run more covered calls and make more money. So that's exactly what I'm looking for here. As far as the realized appreciation, so that $200 I made from the QQQ, I will not reinvest it. I'm just going to leave that $200 of buying power available, because there might be a time where I buy back into the QQQ or the SPY at a more expensive rate. So for me to kind of like keep track with the market, because I think the market is going to keep going up, and for me to not get left behind, and then me being able to run, or buy hundreds of shares of a specific underlying or stock, I need to make sure I have enough buying power to accomplish that goal. So therefore, all of the appreciation gain, I just leave as buying power. So now that we have talked about the micro data for July 9th, let's talk about the macro data of the last 60 trading days. Let's head over to the other side of the spreadsheet. For anyone that is a returning viewer, you guys know me. This is my favorite part to these videos, is talking about the numbers, tracking the metrics, and making improvements on our options trading strategy. So let's head over to July 7th or July 9th. So for July 9th, as I mentioned in the micro data, we made $466 of appreciation plus premium gain. The reason why I consider this as a gain is because this is realized money. So that means I'm going to have to pay taxes on it. So that's why I calculated it this way, is because anything that I realize I'm going to have to pay taxes on, I'm going to lump this up into this number. So one, I can track it for tax time, but also two, it's the money I actually made. So since I started this options trading journey about 60 days ago, I've made $18,750. The account is currently at that $168,198.14. And if we look at that as a percentage since trading, that's about 14.96%. So we are doing quite well if you were to ask me. So let's head over to our trade win percentage. I'm winning 98.33% of my trades. I had 59 winning days, 1 losing day, and then in total, like I said, we had 60 trading days. Basically started this back on, April 11th. So let's talk about the fund's performance, or my account's performance. I'm usually averaging about $312 per day. And if we look at that as an average weekly premium, that's $1,442.32. Look at that as an average monthly premium, that's $5,651. So we are doing quite well for ourselves here. So now let's talk about some of the estimates. In the yellow here, I have my estimates that I've compiled based off of the data of the last 60 trading days. So the way I come up with this $75,000 number is I took the average weekly premium and multiplied it by 52, because we have 52 weeks in here. And that's the average amount of money I'm going to make if I were to start the beginning of January 1st all the way until the end of 2025. However, I started about 4 months or about 3 months after the year started. So basically lost 3 months, but we will have about 9 months of data, so that going into 2026 and beyond, that data will be the most accurate. But like I said, based off the current performance, if I were to trade for the next 12 months, I'd make about $75,000. If we look at that as an average yearly percentage, that's about 51%. And this ranges somewhere between 49 and 60%. So some weeks I'm going to have a monster week where I'm making, $2,000, $4,000. And there's going to be some weeks like last week. It's a shorter week. We only have 4 trading days. And then one of the trading days was kind of a half day. So then the premium is not going to be as high, because it's going to be an $850 day. You can't necessarily control that, and you can't force gains in the market. You just have to take what the market's giving you. The second you start forcing gains, that's when you're going to get sloppy, and that's when you're going to start making mistakes. We don't necessarily need to do that. We're making plenty of premium on a daily basis, so we don't need to force anything. One day the premium might not be good. That's okay. We'll make up the premium on another day. The market giveth and the market taketh away. So in 2025, we have about 25 weeks left. I am hopeful for making about $36,000. This number is based off of the account performance, because we have that 25 weeks left. Multiply the weekly premium by 25, we get 36,000. However, I would be totally fine with just making $1,000 clean every single week. That would be a very conservative number, and I am okay to make some of my calculations based off on conservative numbers. So I feel like I can easily hit that $25,000 extra on top of the $18,000 I've already made. I think that is a realistic goal to shoot for. And then the hopeful number, of course, we all want the hopeful number. The goal, I'm not really going to talk about the goal. I've mentioned this a couple of times. Maybe on my Monday videos, I'll just kind of reiterate it. But when I first started this options trading back on April 11th, I had an initial goal of $29,000 because when I first started trading, I had an account of 86,000. But since then, I've put in some money, and then this number seems quite low compared to what I'm making right now. And then we were about less than $11,000 away from reaching that goal. So that's pretty exciting. And why are we doing this in the first place? Because we need to have a vision to go towards. So let's talk about that vision. At 2025, at year's end, I should have made about $54,000 of premium / appreciation, but I am going to have to pay about $19,000 of taxes because I'm a high income earner. So all of my gains are going to be taxed at that 35%. Uncle Sam's going to want his cut. So I'm going to have to pay it, pay the man. But in theory, the end of the year value should be about $183,000. So that is not too bad. So basically whatever my account is plus, $18,000, $20,000, that'll be quite good. But ideally, if I were to keep doing this like next year, I don't think I'd be able to stop working in 2026. I would only make an income of $94,000, have to pay taxes about $33,000, and the account would be at that $245,000. Because for me to really stop working, I would say stop working is like the wrong way of phrasing it. Retiring is the wrong way of phrasing it. Is just giving you the freedom of what money provides. Because if you don't have to worry about paying your mortgage, feeding your family, paying for your car, paying for groceries, then you're allowed the ability to do stuff that you want to do. So money allows you the freedom of time, and time is something you can never get back. So end of 2026, I wouldn't be able to retire. End of 2027, I don't think so. I think by 2030, we are starting to get more realistic at this, potentially not working stage. If I can, by 2030, make $297,000 a year by trading 15 minutes a day in the morning, I am definitely going to take you up on that offer. That account's going to be at that $774,000. I have no problem with that. However, say we're at 20. I know I messed this up in the other video. I did 15 years instead of 10 years, but that's at 2030. If we went to 2035, if I just grinded it out for 10 years, I would be about 41, 42 years old when I would 2035 would roll around. Theoretically, if everything stays the same, I mentioned this in all of my videos, that might not be realistic. However, based off of what the performance is, all of these, estimated incomes and end of year values is based off of this percentage. So every single week and every single day that this number changes, so are all of these. So if my, trading starts to go down the drain, then all of these numbers are going to reflect what this percentage is going to look like. So it's actually quite accurate. And then whenever the years are going to complete, I'm basically going to lock the cells in place and then continue the next cells with the new data. But by 2035, going back to the main point I was trying to get here, I'd be making $1.2 million. I'd be paying close to $500,000 in taxes, but then the account would be somewhere around that $3.2 million. I think that is something to strive for. And kind of like what I mentioned in my previous videos, even if by 2035 this is half of that number, that's still 1.5 million or 1.6 million. That's still a massive amount of money, and that'd be about a $600,000 return. Even if this is 1/3 that money, that's still $1 million, and that's going to be $300,000 or $400,000 a year. So the potential return by being a little bit more active than just letting your income or your investments sit into a tax advantage account I think are far outweighed, because for me, at any point in time, I need to use any of this money to pay for bills, or say if I get laid off for whatever reason, I'm able to then maintain my quality of life because I have this ability to make income based off of my investments, versus if you throw all of that money into an investment account that is locked away for 30, 40 years, sure, you might be able to take it out with a penalty. But at the end of the day, I'd rather have the flexibility of having a taxable account, that money I can use immediately to pay for things I need. So that's kind of the long-term dream. But let's say if I decided to continue working, I will caveat this one thing. This is without me putting another single dollar into this account. This is just based off of the investment of itself. So if I were to throw money into this portfolio every single week or every single month for any of the extra cash, we can definitely expedite this process even sooner. So that's just food for thought. But now let's head over to what the weekly tracker looks like. Recently, we broke a 4-digit club win streak where we were making that $1,000 or more a week. We lost it last week, but then this week, after 3 trading days, we are already at that 4-digit club. We're back to that $1,000 range. And basically, these next 2 days are going to be straight bonus. And you bet your top dollar I'm going to try to maximize my return the next 2 days. Maybe Thursday, I'm going to continue as normal. And then Friday, maybe I won't maximize it. I'll just kind of see what the market looks like. I'm not going to be looking for a home run. I'll probably just be looking to capture some appreciation. I would probably side on more appreciation on Friday and then just capture a little bit less premium so that on Monday I can come up with a new game plan with what I'm dealing with. Yeah, guys, weekly tracker for this week, we're already at $1,022. For the monthly tracker, we slide over here. For the monthly tracker, we're already at $1,794 after 9 days. And for the yearly tracker, we are close to getting to that $19,000 mark. We're at $18,750.15. Cool, guys. So that wraps up the macro data. I'm loving how this options trading is going. It's performing very well. And after 60 trading days, after 60 trading days to make 14.96% return. So imagine another 60 days. That's going to be 28%. And then add another 60 because we have about 6 months left. Guys, we are well within that range of making about 50% a year. So I am super excited about what the future is going to hold. And I wake up every single morning excited to trade because I know I'm going to make hundreds of dollars. So let's head over to Robinhood and talk about what I plan on doing for tomorrow based off of what my account looks like today. All right, guys, we are back in Robinhood and let's start talking about what I plan on doing for July 10th. For any of these seasoned investors, you guys probably don't necessarily need to see this. Trading covered calls and cash secured puts is relatively simple once you kind of get the hang of it and you kind of develop your own strategy. But for anyone that's a new investor, this is going to be important just to kind of go through the motions to see what options trading looks like. For me, I'm very specific with my options trading. I only do covered calls. I only do cash secured puts. And I highly recommend if you're a new investor to only run those types of options because once you start doing buy calls, the potential for gain is significantly increased, but the potential for loss is also increased. And then 90 to 95% of investors that actually do buy options don't win over the long term because they get too emotional. So I recommend just doing the easy, guaranteed money that's upfront. We don't need to be doing anything too fancy. Guys, I'm not doing anything too fancy. I spend 20 minutes in the morning trading and then I make hundreds of dollars. So right now that we're here, so from what I explained in the spreadsheet with the micro data, 100 shares of my QQQ got assigned at the 556. And interesting enough, that actually played in my favor because if we look at the stocks that I own, the QQQ is actually at the 554.96 in the after hours. So I basically locked in about $100 or $104 of appreciation, and then the QQQ went down. So theoretically, I can just buy back in at the money and then run another covered call if I decided that was something I want to do. Or I can just run at the money, cash secured put, maximize that, premium up front, and then I would be able to buy the QQQ at a relatively good price of, maybe not necessarily a relatively good price, but I would be able to assign them at the end of the trading day so that going into Friday, I would have 200 shares again. So it's something to consider. We'll see how I feel. I won't say how I feel, but we'll look at what the market looks like in the morning to make a determination. Hey, should I just buy 100 more shares, at this 554, or do I just run just 2 cash secured puts for the day and then maybe a couple of individual stocks? So we'll see what the numbers look like. Let's start with QQQ and look at the covered call. Let's go over to trade QQQ options. This is the button you need to press to run your options. See this buy call? This is what I was talking about. Don't ever do this. 90 to 95% of investors are going to lose money. I'm going to beat the dead horse. You only need to be doing these types of options If you're already making money hand over fist doing covered calls and the cash secured puts because you're a seasoned investor and then you understand the ups and downs of the market and you're not going to get too emotional. If you're not able to control your emotions, don't do buy options trading. You're going to have a really bad time when the market swings. So with that being said, let's hit that sell call. Market trading at this 555.06. So yesterday, or I mean, not yesterday, but today I chose the 557 and 556. We're kind of dancing on that line. And let's take a look at what $5 away from at the money looks like. So let's look at the 560 and see what that delta is. So that delta is 0.6. So anyone that's not familiar with delta is the likelihood of this option executing. So we're at 0.16, which means a 16% chance. I don't like this $32. That's a bit of a low premium for me because if I'm going to be putting, $56,000 of money on the line, I want to make more than just $32. So let's choose something a little bit better than that. So this $84 is more my language. So that strike price is that 558. Let's look at that delta, 0.33. I usually like to choose strike prices at that 0.2 to 0.3. This is a little bit higher, but that's fine. Horseshoes and hand grenades, this is close enough. So ideally for tomorrow, I'm probably going to select this $84 option. It's going to be good amount of appreciation if the market were to go up. So if I were to get this assigned, I would make $300 of appreciation plus this $84 of premium. So therefore, that'd be close to, almost a $400 trade if the market goes in that direction. But we'll see if in the morning this option is available with $84. I'm probably going to choose it. If it's less than this, I probably will then move towards this 557 again. This was a good number. And we'll see what the morning looks like. That 126 looks real juicy. I'm telling you that right now. So now let's talk about the sell put, which is a cash secured put. Market is still trading, or the QQQ is still trading at this 555.05. Just look at what $5 away looks like. It's about 550, $19 a premium. So there's 0.19 is just times 100. So that's 19. Delta, 0.09. Not necessarily a fan. So let's look at what this, 552 premium looks like. 15% chance, $35. Not liking it either. Let's look at this 554 for $68. That is more so for my liking. Delta of 0.27. So ideally, this is something I would like to choose, this $68 mark. This 555 strike price, that's a little too close to my liking for at the money because I don't actually want to get this assigned. But if I were to get it assigned, I'd prefer a better price. And then that $68 is a fair enough trade-off for me. So for tomorrow, I'll probably run this $68 cash secured put on the QQQ. So just from those two options alone, I'd make $152. No problems there. So yeah, now it just begs the question, do I run another cash secured put maybe at the money if I want to buy QQQ shares? So I can choose maybe this, this 555, make $95 a premium, lock in the shares by the end of the day. And then for Friday, I'll have some more shares to trade and run covered calls with. Or do I just go to SPY and maybe do the same thing, but do it for SPY? So let's head over to SPY. So since I don't own any shares since I don't own 100 shares of SPY, the only thing I really do right now is do a cash secured put, making sure we're choosing an expiration date of 0 day because I like to run dailies. Let's head down to this 622. So let's look at $5 away. 7.07, so that's 7% chance of it executing. $14 for putting about $61,000 of money on the line. $19 is not enough money. So let's look at, I don't like this 33, it seems a little too low. 621. 21% chance of this 621 strike price hitting. What about this? Oof. Gamble. Do I choose this 0.28 delta, which means there's a 28% chance of this executing for $63, or do I just go back to QQQ and run two cash secured puts there where the premium was a little bit higher. I think the premium was higher for QQQ, so I might just run both of my cash secured puts from the QQQ. So we will see. But then if I happen to run 2 cash secured puts on the QQQ, that means I'm going to be left with some money left over, because I have about $98,000 of cash, and then I have $150,000 of futures contracts or event contracts. So I would use about 110,000 of these future contracts on these cash secured puts on the QQQ. So I'd still have about $40,000 left over. So that means I'd have enough money to either run a cash secured put on the Oracle shares or cash secured puts to run on nvdy or Amazon, one of like the tech companies that are part of the QQQ. So ideally, I'd be able to do that. But then this cash doesn't apply towards running these event contracts for the cash secured puts. So that's the interesting dilemma. Do I leave just my money in cash, or do I just straight up go and buy another 100 shares of maybe SPY or 100 shares of QQQ, so I can lock in that cash, run a covered call, and I still would be able to run 2 cash secured puts on the QQQ. So I would be able to run 4 options contracts. So if I want to maximize my premium, that's something that I'm going to do. But if I want to take it easy, I probably would just leave this in cash, get one of my cash secured puts assigned, so that by Friday I would have the setup that I actually want. That's food for thought, guys. Let's stay locked in. Let's stay disciplined. Let's stay harvesting. Matt out. I will see you in the next video. Let me know if you have any comments. Leave them in the comment section. I'll try to answer them. No promises of me answering them day of. I'm a busy guy, so I'm probably get to them by the weekend. Yeah, guys, that's the video. See you later.